Gopal Mahadevan, who's CFO of Ashok Leyland, joining us to discuss their strategy. The growth momentum in CVs is likely to continue. Remember, benefits from regulatory changes is something that will work in favor for the business. And there's, of course, more focus coming in on the non-core side. Mr. Mahadevan, of course, will be giving us more details on that. A strong set of sales numbers, Ms. Mahadevan, with growth momentum in the CV industry going so strong. Would you say it's because of changes at the macro level, or is there a change in consumer preference at play? You know, the industry is on track to post high double-digit growth in the next 2 years.
I think, yes, it has been a good year for, the Indian MHCV industry. We have posted about a 14% growth in volumes. I think this has been driven by three reasons. One has been the infrastructure spend in the country is now really caught on. So if you really look at it in the northeastern side, the central side, and the northern side of the countries, you are seeing investments happening in infrastructure, especially in roads. So that has taken off the demand for multi-axle vehicles. The second reason I think is also GST. I think GST has had a very positive effect. Before GST was rolled out, I had shared with you that if the productivity of vehicles increase, you'd see more investments coming in. And that exactly was what has happened. We've seen that, the turnaround times have improved. So we have seen larger fleet operators actually putting in more investments into the sector. The third reason has been also regulatory also. So if you look at it in states like Rajasthan, in UP, etc., we have rated loads coming in. So that has also increased the demand for trucks. So overall, we can also see that the profitability of freight operators has improved. So we've seen a lot of investment coming into the sector. To answer your question of how the new year would look at, we'll have to guess. But I think at this point in time, we can expect if the infrastructure spend were to continue and if things stabilize, I think we should see another 10% growth in the forthcoming year.
Right. Since you mentioned about the benefit from regulatory changes, give us a sense of demand uptake you're seeing on the back of overloading norms, pre-buying ahead of the BS6 transition and CV scrappage policy.
I think if the rated load, regulations were to spread across the country, that would be very positive for the industry and also for, general freight operations, because overloading is not a good thing to have. It has multiple implications, including impact on roads. So I think that would be a strong driver for demand into the CV industry. The second thing is, I think a lot of uncertainty of the past has stabilized. You must understand that, we have gone through a demonetization, then we have had the BS3 to BS4 change that has happened, and then after that we had GST implementation. So we have had to weather a lot of change over the last possibly 12 to 18 months. Things have stabilized now, and if the economy were to grow, I don't see any reason why the commercial vehicle industry will not grow. As far as scrappage policy is concerned, I think it is more towards 2020, and if the government were to implement it with an incentive-led solution for customers to phase out old vehicles, I would say that should also add quite significantly to the total industry volume, but I think that's still some distance away.
Okay. Mr. Mahadevan, LCVs are also consistently growing at a run rate of about 50% plus. What are the multiple levers that are boosting this segment, and is this segment going to be pushed forth by the company going ahead as well?
Absolutely. I think LCV is a very, very important business for us. We will continue to invest further into the business. We have grown very healthily in the current year. Our volumes have been nearly about 43,000 units, and the last month saw a very healthy number. We will be coming out with new product launches also over the next 12 to 14 months. We'll see possibly about 5 to 6 product launches coming in. And, one of the positive benefits of GST, which I didn't possibly mention in the earlier question, was the clear segmentation that the market is actually getting into. So you have a very clear long haulage market that's happening. The second one is the ICV market is also growing. So the entire hub and spoke arrangement, which GST has kind of helped to gather on the ground, has actually grown not only the heavy duty vehicles but also the ICV segment and the LCV segment. So you are seeing, as you mentioned, a huge demand for LCV, and I believe that this will continue into the new year.
Right. Even high tonnage vehicles are also witnessing very strong growth. You'd previously guided for a 10% growth of MHCVs, that's in FY18. Does that hold still, or would you revise it since demand now remains higher than expected?
Well, we hope that the industry surprises us and grows faster than the rate that I'm at the moment cautiously sharing with you, because let's see how it pans out. It looks pretty good at this moment in time, but we'll have to see how the year pans out. The only thing that I would share with you, which is a positive, is the industry very clearly is moving towards multi-axle vehicles. Especially 37 tonners. You've seen a huge demand that's taken on, because 37 tonners, then you've got tippers that are coming in, the tractor trailers. All of this is seeing a lot of pull in the market. Very clearly, freight operators are also seeing the benefit of actually owning larger vehicles, because the economics of scale are very clearly established when you go in for larger vehicles. And similarly, customers, the end customers, are also preferring larger vehicles. So we are seeing a very clear shift to the heavier vehicles as we move forward. So don't be surprised if the industry moves from 37 tonners to 41, 42 tonners. Very clearly, we have 49 tonner demand also going up.
Right. The increased prices to some extent can take care of the rising raw material costs. And now that the fear of pricing and discipline also has been abated, what kind of margin expansion can we expect you to deliver?
Well, I can't give a forecast on what will be our margins, but all I can tell you is that we have been posting double-digit EBITDA margins for quite a bit of quarters now, save for I think the July results that happened last year. We will pursue with that policy. I think for us, we are very clear. We would want to grow. We have our plans for growing. We have a network which is expanded sufficiently well. We have new products to be launched. But at the same time, we will want to ensure that we keep our costs intact and grow profitably. So hopefully you will see some improvement in margins in the forthcoming year also. But it's a little too early to state.
Okay, you just mentioned that LCV, ICV businesses are going strong, and we are aware that you have been looking to boost non-core businesses in a big way. Tell us, are you on track to increase the share of businesses like defense, exports and aftermarket to 50% of the overall revenue pie as guided by you earlier?
Well, we haven't shared a specific 50% mark, but what we want to do is to devolatilize the company from two things. One is domestic, the second one is truck. I mean, we would pursue growth in domestic truck business fervently. Rest assured that we are going to leave no stone unturned in that. But having said that, we would also want to grow the other businesses faster if possible. So those are typically the defense business, the LCV business, the bus business, the international revenues and the aftermarket. I would say that we are very satisfied with the growth rates that these businesses have posted. We have retained our leadership in the bus business in FY18 also, and we will pursue that strategy as we move forward. I think you would see a change in the overall mix over the next 3 to 5 years, because we are putting in all the the relevant building blocks for this strategy. As I'm speaking to you, we have been investing into international business. We have invested quite heavily into the defense business also. And when I say investments, these are not large, lumpy capexes. It's more about strategy and putting peoples in place, getting the networks in place, getting the necessary infrastructure in place. And we are very satisfied with the progress that the company is making.
Okay, Mr. Mahadevan, we'll leave it at that. Congratulations once again on an excellent set of numbers in the month gone by. And we hope to see that kind of demand going forward too.